this live session is all about your questions. So the topic for this live event, Mortgage Insiders Edition, is basically ask us anything about mortgages. So if you are new to our Mortgage Insiders Edition, we will introduce ourselves. Myself, Preet. I'm a mortgage broker with Wine Group, mortgage associate with Wine Group in Edmonton, and my colleague Kim Nguyen is same thing, mortgage associate broker with Wine Group in Calgary. So we are a national team, but we are licensed in Alberta and covering all the mortgages in Alberta. Yeah, so this is all about your questions. If you have any questions, no question is a small or big question related to mortgages, finance, and we have some knowledge about insurance industry also. We did a couple of videos in the past where we had live people basically from the insurance industry join us, and they shared their wealth of knowledge. Lawyers joined us, appraisal companies, inspectors joined us. So you're most welcome to ask us any questions related to mortgages, finance, or real estate. We will try our best to answer them. If we are not able to do it today, we will park that question and we'll come back to you in the next time. Right, Kim?
Yeah. But I think like for this session, anyways, I guess maybe what we'll start off is just some housekeeping items, like just some hot off the press topics that, many Canadians may be wondering about. So I
Mhm.
know, to start things off, again, September, this is another month here where Bank of Canada is scheduled to meet. So for those of you joining in right now, Bank of Canada is scheduled to meet tomorrow. So tomorrow by 8 a.m. Mountain Standard Time, we should know whether or not interest rates are going to go up or down. So I think, Preet, like we've talked about this all the time, Bank of Canada's meeting. I think the general consensus is there's going to be a drop. So a huge, huge win for all of those variable rate holders. So you'll see some relief. The biggest thing is remember that when Bank of Canada drops the interest rate, again, we are expecting about a quarter point, but I don't know, Preet, like, do you see any more than that, any less than that? What are your thoughts?
My thinking is, and I will go ahead with a little bit bold, I would say prediction. I think it would be 0.5 or basically, right? So some I was reading basically something on internet, again a comment section. Nothing concrete of it. That comment section is, some people are thinking it could be even higher, 0.75, right? But I don't think so. I think it will be 0.5 would be the rate cut rate,
Yeah.
basically, right?
And
So
I think like for anyone who's a variable rate holder, this is the moment we've been waiting for, right? So
Mhm.
I myself too have always been a fan of variable. It's been a long time coming. So
Yeah.
finally we will start to see some type of relief.
Mhm.
I think the biggest thing too is just to remind everyone listening is if you do have a variable rate mortgage, just know that for sure, if there is a rate decrease, some lenders will adjust your payments, but not all, okay? So there are certain lenders that will adjust the amount that will be payable towards principal and interest. So just kind of keep that in mind. Majority of lenders will decrease your payments though, but there are still some of the banks out there that have like a static variable rate payment where essentially your payment still stays the same, right? But again, more money will be going towards principal rather than interest when the rates do drop. So
Absolutely.
something to kind of keep in mind.
Yeah.
Yeah.
So just to touch on that topic, variable rate mortgage again has two different type of payments, and different lenders option provide this option. Some are static, some are adjustable variable rate mortgages. So preferably, like you should go with basically an adjustable rate mortgage. In my basically, I would say experience, it's a good product in case of basically the interest rate goes up, it is adjusting accordingly, and you're not falling behind on your payment schedule. But if it goes down, then it also helps you because the payment is adjusted accordingly and it goes down, right? Static sometimes also helps you if you are a tight budget, monthly budget, family budget, then yeah, static helps you at that time. But keep in mind the static payments under the variable, you will start getting letters from the institution, the bank especially, that you're falling behind on mortgage. You would have to keep up with the mortgage, and then the options would be to take the higher payment or make a lump sum payment. And sometimes you're not in that position to make a lump sum payment. That's why I prefer sometime to go with an adjustable rate mortgage instead of a static mortgage. Yeah,
Mhm. But
definitely.
I think like the other thing too to note is I know again I deal with a lot of investors. So for anyone listening who's an investor, sometimes
Mhm.
the static can be also a good option if you're buying like a rental property and you need
True.
that security for cash flow.
Yeah,
So again, like consult your favorite mortgage professional, right? There's no right or wrong answer, but I would say everyone's situation is very unique. So best to find an advisor that, really digs beyond your needs, right? Not there is no right or wrong. It's just everyone's needs are a little bit
yeah.
different. The other thing too that I want to mention is with Bank of Canada decreasing rates tomorrow, always remember that it doesn't have a direct impact on fixed rates, right? So it doesn't mean that if Bank of Canada is going to drop rates by a quarter point, that we're automatically going to see fixed rates drop by a quarter point as well. So
Mhm.
again, really be mindful of that. It does not equal 1-to-1 ratio. Usually with a fixed rate, it is based on the bond yields, right? And bond yields are based on economic conditions. Again, there will be a decrease because naturally, like I said, with the economic conditions right now, we should see some type of relief on the fixed rates. But again, it's not going to equal quarter, and it's not going to be effective right away either. Usually, it does take some time for banks to adjust.
Exactly. And moreover, the impact of a rate cut on the Canadian economy or the real estate would not be instant. It will be basically lateral impact. What we have seen is as soon as the interest rate is, there is a cut, especially, or even an increase, there's sudden rush to the market. And some people that are holding on would like to come to the market and they will try to buy it right away. So there would be a lateral impact of any rate cut that is happening or any rate increase that is happening. Bank of Canada always say there is basically the real impact of that rate increase or decrease is 18 to 24 months out. So that's what the indicators, basically the market economy and the numbers, basically the data, real data basically comes up within that time frame. It could be sooner if there are more rate cuts happening. There could be more sooner impacts available also. Yeah. So by the end of this year, more basically rate cuts are predicted, and let's see what happens. It's all nobody has a crystal ball. It's all up in the air.
Yeah,
So Kim,
I think you know what, honestly, you said it correctly, right? Nobody has a crystal ball, so we don't know.
mhm,
All I do know though is that when it comes to interest rates, just always remember that there's a saying where when rates go down, banks like to take the stairs, right, for the decreases. So they're not going to be fast to decrease it, but when it's the opposite way around, where rates are increasing, banks will increase right away.
mhm,
So just always remember there is that correlation. But
yeah,
I guess I think we have a question. So again, everyone, just a reminder, this is a fresh Q&A. So if you have any questions related to mortgages, shoot them in the little inbox there, and then we'll try our best to answer all of the questions.
mhm.
But I think we've got one here where if I have bruised credit, how difficult is it for me to obtain a mortgage? Preet, do you want to take over on that one?
Absolutely. So if you have a bruised credit, it definitely will you will have challenges with obtaining a mortgage. So it all depends what kind of bruised credit you have. Like if you basically file the consumer proposal slash bankruptcy, then the road is totally different. But if let's say if you have bruised credit in a sense that you were late on payments for a life because of a life-changing event or something happened which forced you to be late on the credit history, then there are always mitigation factors. We can explain it to the lender what happened, why it happened, and it was an isolated incident. And for that reason, basically, you can basically say, yeah, I this client is not a repeat offender with their credit. They are financially mature. They can manage their debt properly. Then we can basically mitigate those risky factors and convince the lender and the insurance company with those answers upfront. The best mortgage broker will address your credit problems or the bruised credit history even before going to the lender. They will ask you those questions day one. Like they will not delay those things day 10. They will ask those questions right away. And I know those questions sometimes seems like very personal questions, that why we are asking you those questions. But we want to know why it happened so that we can represent you properly in front of the lender and the insurance company, right?
Yeah.
So answering your question, Bruce credit could have different levels. If it is a consumer proposal or bankruptcy, definitely you will have tough time obtaining a mortgage. There are options, i.e., I would say private mortgages and all that stuff. But keep in mind that you would have to put more down payment to secure those approvals.
Yeah.
Kim,
And
am I missing anything? Yeah.
yeah, I think like just kind of to add to your note too is if you do have bruised credit, it is very important for you to tell us as your mortgage professional the entire story. And the
Mhm.
reason why I asked, the reason why I mentioned this is because we truly only have one true shot to paint you in the best of lights when we're presenting your file to a lender, right? The last thing we want to do is to kind of, submit your file to a lender and then they come back asking all these questions and it's just a matter of going back and forth, back and forth. Sometimes that can actually jeopardize your profile, right? It can jeopardize your chances of an approval. That's why it's better for us to know the whole upfront story. So then that way we can kind of piece it together in a way that it makes sense to a lender to get you the approval because they understand the fulsome picture of it. So that is a very important feature. So just make sure, you explain to us the details. The other thing I always mention to my clients as well is if you're ever unsure about your credit, just know that, again, many Canadians aren't aware that Equifax will give you a free credit report. So
Mhm.
every Canadian is entitled to at least one free credit report per year. So you do have to go on the Equifax website to sign up. It does take a few weeks for your report to get sent to you, or they do have this program where I believe it's like $20 a month that you can pay and it gives you monthly monitoring. Now, this is really good, especially if you think your credit is on the cusp, because when you have a credit score that is, dipping below, I would say the 600 mark, be very, very careful. Like what I've noticed is when you're below 600, it is very hard to get yourself above the 600. So try not to get to below that point if possible, right? Like that would be my suggestion.
Yeah, like as I said earlier, it all depends upon the personal scenario, what happened and why it happened. If you have more detailed questions or scenarios to discuss, you can reach any one of us and we can listen to your whole story and recommend you a few steps that you could take to elevate your credit score. There are a few things that you could do, which could basically help you bring up the credit score, as Kim said, over 600, reasonable, fair number, right? And I know it will not directly go from 500 or 550 to 800, but it will be baby steps. It will go slowly and slowly, gradually, it will go up, right? So, yeah,
Mhm.
definitely. Kim, we have other
Yeah.
questions also. The next one is, if I have a superb credit, obviously this is the opposite of that. What are some of my financing options? Am I still able to qualify? What kind of fee would be associated with this? So, Kim, would you like to take
Yeah.
this one?
Yeah, I think like when you have really good credit, just know that it's not so common that we see it now, but there are some lenders, right? Like if you have a certain credit score, you get better pricing than like
Mhm.
certain tiers, right? So just know that I find like subpar, like a good credit score in my eyes anyways is usually above 700. I find if you're above 700, generally speaking, you're gonna get pretty much the best financing options there is, right? You're gonna get your cream of the crop interest rates. In terms of like qualification, that's very standard, right? Depending if you're doing like a down payment that's less than 20%, there's only so much wiggle room we have because those are usually insured mortgages. So we've got a sandbox that generally we have to play in. Fee wise, though, when you're working with a broker, a big thing I get asked is, do you charge fees? And
Mhm.
the answer is no. If
No.
we're doing like a standard, regular mortgage, we don't need to go to maybe a B lender or a private lender. Us as brokers, we actually get paid through commission through the lender. So
Mhm.
we actually work for you, and there's nothing that you need to pay to us. We're working on your behalf.
Absolutely. The next question came is it possible to consolidate debt? Can you explain how this will work? So definitely I can explain this one. I will take this one. Debt consolidation basically revolves around a refinance of a mortgage. So if you have an existing mortgage and let's say you had this mortgage for last 10 years, but now you have basically for some reason, accumulated personal debt, which would be your line of credits, credit cards, maybe a personal loan, something like that, and you would like to consolidate it and make it one mortgage again and one single payment with the lower interest rate, definitely could be done. It is basically called as a refinance of your existing mortgage, or it's sometimes called as taking equity out and paying the other debtors and creditors out, right? So what the lenders will do in this scenario is how it will work is they will, first of all, they will approve you on an, let's say, estimated value of the property, let's say $500,000. They will say, we will lend you up to 80% of that home, and the maximum in this example would be $400,000, and they will minus the existing mortgage out of 400. So example in this case would be, let's say 300,000 is owing on your mortgage. So you have now $100,000 of room available to consolidate all your personal debt, or let's say credit card or personal loans into it. So as long as those numbers fit into this box, these calculations, the lender will say, yeah, go ahead, this is the conditional approval. They will put conditions in there subject to basically paying off those debts that we already discussed earlier, personal debts. And then they will basically ask for, most likely they will ask for, I would say 95% chances would be there would be an appraisal in this scenario. As soon as the appraisal is complete, the appraiser basically finds out, yes, this property is confirmed the evaluation of $500,000. Earlier, we were estimating it. Now we have a confirmation from the appraisal company. It's a third-party company, not related to lender, not related to broker like me. Third party who is looking at the sales which happened in your area in the last 90-day window, 3 or 4 different sales, and they will come to an average value of your home. As soon as that appraisal part is complete and you have basically confirmed value, the lender will basically help you with consolidating those debts into one single mortgage. Okay?
And just remember with refinancing as well too, if you've got an existing mortgage, again, sometimes there could be penalties involved, right? So
Mhm.
like just again, best to check with your mortgage professional. Some offer like a blend and extend where if you do a refinance, there won't be any fees, but you're extending your term. Some of them will charge a fee. So again, best to really check in with your mortgage professional on that one. Okay, let's see here. We've got like another question here. I'm just going to take a look here. If I have filed for bankruptcy in the past, will it affect my chances of obtaining mortgage? Good question. If you were talking to a bank representative, they'll say, good luck, we'll never give you a mortgage, right? 100%. And the biggest thing I want to mention is a lot of Canadians will go towards their bank and ask and just automatically assume that it's not doable. But no, like when it comes to bankruptcy, there are lenders out there. It won't be the major banks. I'll tell you that right now. But there
Mhm.
are still lenders that will lend to you, right? Again, there are certain stipulations to it. Like you still need to have, again, your credit rebuilt and such. But I can tell you right now, long story short, though, major banks, it'll probably be a no. But again, there are certain other lenders that will take you on as a client for sure.
Yeah, just to add on to that, so if you have filed for bankruptcy in the past, you first of all to go back to any lender for obtaining a mortgage, you should be discharged from that bankruptcy, and after discharge, you should have minimum reestablish your credit history for 2 years. And the recommendation is 2 credit cards or 2 trades. It could be a credit card, a line of credit combination. Normally, a credit card we have seen for a minimum of 24 months. So 222, that's what you need basically. And that will be if you have reestablished your credit history after the discharge and reestablish the credit history, it will be an easy thing. But as Kim said earlier, there are exceptions. If you have reestablished your credit for, let's say, 1 year and few months, then there are some lenders who will take a look at your whole scenario and the reasoning. As we earlier discussed, we have to give them a proper reasoning and explanation why it happened, what was the reason behind it, was it a life-changing event, or was it done just deliberately, like were you basically not taking taking care of your finances properly, or were you basically forced to go that path of bankruptcy or consumer proposal?
Okay. And
Right?
then I think we've got another question here. So, can I buy a used home which needs renovations?
Mm-hmm.
Will banks help me with the renovation costs? Good question. This is a
Awesome.
very
Awesome.
common one that we see.
Yeah. So definitely, yes, you can buy a home which needs renovation under the resale home. We would call it resale home, definitely normally through realtors or private sale. Yes, the lenders will give you extra money to complete the renovation. So the product name is basically Purchase Plus Improvement. I have to say this is the least commonly used program. This is such a good program, but it is unfortunately very least used. Many people don't even use it to their extent. So this under this program, you can do cosmetic renovations to the property, not structural changes. Many lenders will say no to structural changes. Cosmetic changes could be replacing a carpet, shingles, painting, kitchen remodeling, anything that basically adds on to the value of the property. Now, developing a basement is one of that, right? Now, the biggest thing is you would have to spend money from your own pocket upfront as soon as you take possession of the home, complete the renovations, and then the lender will basically release the money to you via the lawyer's office. So the money is not given to you upfront, it's given after the project work is complete. The lender may send, some lenders do just by declaration signed at the lawyer's office, depending upon the amount, they will release the funds. Some majority of the lenders will send an inspector. They will ask for an inspection report, and they will ask the third-party inspector to confirm the property is, as we have basically done it, declared it before, is complete. So this thing, the Purchase Plus Improvement, application has to be done at the time of application, and the lender will require quotes and estimates for the project work, whatever you are trying to do, the renovations that you're trying to do upfront.
Mhm.
So those you need to have ample time when you're writing an offer. You already need to have a renovation contractor, a general contractor already in touch with you so that it does not delay the process. Kim,
Mhm.
am I missing anything on that?
I think like the one thing to note too is if you are interested in doing like a purchase plus improvements mortgage, so again, you're buying a home, you want to add on renovations, just know that certain lenders will have limits, right? So some of them will have dollar limits and caps as to how much of a renovation you can do. So that's one thing you have to keep in mind. The other thing that you want to keep in mind too is whatever renovation and quotes that you present to the lender, that renovation needs to be done at inspection. If it's not done at inspection, you're not going to get those funds.
Yeah.
So for an example, if you're going to give us a quote saying, hey, I'm going to develop my basement, but in turn you actually decide to build a pool or something like that, when we send out an inspector and the inspector finds out that you built a pool instead of building a legal basement suite, then that could be very problematic, right? They'll say, hey, this wasn't disclosed, so we're not going to give you that money. So just keep in
Exactly.
mind, like those are things to keep in mind. The other thing too is there will be time limitations, okay? So again, some lenders will give you only 4 months to complete the renovation. So this is actually very good information because if you're planning to build like let's say a garage and you're taking possession of your home in the winter time and the lender's only giving you 4 months, we all know that you can't build a garage over winter. So just be
Mhm.
mindful of that. Maybe we need to find another lender that has this product where they allow up to a year. So
Yeah.
usually the range for purchase plus improvements, some lenders will give you only 4 months, some will go up to as high as a year. Some will have limitations as to, the dollar figure. Sometimes we see around 40,000, but we've seen clients, or sorry, lenders anyways, that has gone up to as high as 100. Okay. So it just depends. And also when it comes to the purchase plus improvements, this also works on a refinance too. So if you
Mhm.
already currently own your home and let's say you want to do a refinance with improvements, right, to boost up the value of your home, that is also doable as well too. Very few lenders do it, but there
Yeah.
are still some.
It is possible. Other thing, Kim, I would like to add on is the interest rate on purchase plus improvement for the money that is added on top of your purchase price is the same. So let's say if you're adding on $30,000 for renovating your home. Whenever the $30,000 is advanced, 120 days later or within 1 year, it's the same interest rate. So that's the benefit. So when I said earlier that you have to spend money from your own pocket, you can borrow that money from your friend, family, line of credit card. You can borrow it from wherever to complete the project. The bank does not ask questions about that portions. But the main thing is you have to spend money from your own pocket first, and then the money is released. I would also like to add on, if let's say your lender only gave you 120 days, 4 months to complete the project, and for some reason, let's say permits or a shortage of material or labor, we already know, especially in COVID times, we had seen lenders were able to give exceptions and they were able to extend that period a little bit longer, maybe 10, 15 days is okay. But we need to know in advance. You need to stay in touch with your mortgage broker and communicate right after the possession. That's what I recommend in this program. As soon as you take possession, next day, the contractor should be starting working in your home so that you finish in time. So definitely. Yeah, that's definitely a good product and everybody should look at that. Kim, I believe next question is related to that, definitely. I'm looking at adding a legal basement in my primary residence. What are my options? So Kim, as you said, talked about renovations, right? So renovations plus improvement.
Yeah.
Um,
The other
yeah.
thing could be like refinancing your home. So if you currently already own this home, there's already some built-in equity. We could always refinance it. You can take that equity out and use that to then legalize your to add like a legal basement suite. But yeah, like the refinance plus improvements. If there's not enough equity, and you know that once you add that legal basement suite, then there will be equity. That would be a good option. But yeah, like it's a great thing. We're also seeing that come up often too in Alberta. I don't know about your neck of the woods in Edmonton, but in Calgary, because right now, like there's a lot of talk about adding like an additional dwelling unit,
Mhm.
right? Like a garage suite or a laneway home.
Yeah.
Yeah, there's lots of lenders. There's about another lender that introduced a special program for that too. So if you are looking to add that additional dwelling unit, yeah, there's programs out there.
Absolutely. No, it's the same thing here. I have seen an uptick of inquiries coming in where people, especially in the central Edmonton area, like where the services are available and it's more central. There's obviously an alley behind the properties. Those laneway houses or garden suites are becoming a very common question right now. And just adding to the same thing, this person again asked. Mr. Sethi again asked the same question, legal basement. So your options would be basically either refinancing this property mortgage that you already have, or if that's not possible, then the only option left is borrowing as a personal loan, right? So which could be a branch connection, right? So you can approach your lender and see if they have already pre-approved you for a personal line of credit at a lower interest rate, you can use that also. But I am pretty much sure a legal basement will not be cheap. It will be close to an easy $40,000-$50,000 expense, start to finish, right? So
Yeah,
minimum, right? So
yeah.
yeah,
A little bit more expensive here in Calgary, but
definitely,
yeah.
definitely. Yeah, so awesome questions. I would request again our listeners, if you have more questions, feel free to add your question at the bottom of your screen, and we would be happy to help. We are looking forward to doing these live sessions on a bi-weekly basis, or I would say at least once in a month minimum, depending upon Kim and my schedule. And we would be happy to help all of our listeners and viewers with any mortgage questions they have, right? Definitely. Yeah. So, Kim, I'm excited and waiting for tomorrow's announcement, 8 a.m. sharp, our time, 10 Toronto time. So let's see, it would be 20 basis point, 25 basis points or 50 basis points. That would be
Yeah,
important.
it'll be good. And I think like the other common question I get asked too is, okay, well, Kim, with this new sentiment with Bank of Canada wanting to drop interest rates, like what are you suggesting, right? Do we go, if we're getting a like a mortgage right now, whether we're coming up for renewal or buying a new place, what kind of interest rate should we take? And honestly, I've always been a fan of variable. I still am a fan of variable. And I think right now
Same
with the
here.
projections, I think the variable rate is the way to go. Like, I don't see any other rate being the right answer unless you need it for qualification purposes, right? That, like,
Absolutely.
unless you need to take a fixed rate to help you qualify for the mortgage, I think variable, this is the time to take the variable rate. Because right now, we're expecting that interest rates should drop about another 50 basis points until the end of this year. And then for
Mhm.
next year, we're expecting, I think it was like a 1% drop, right? When you're doing the math, time in and time out, if those projections are correct, I think variable is going to be this clear winner this time around, right? I think that's going to be yeah, the suggestion.
Yeah. So as same as came, my variable rate or adjustable rate mortgages, hands down, is my preference too. I always recommend them. As long as you can qualify, you have the abundant income to qualify for the variable mortgage. Because I will circle back why variable would need more income. Because as of today, variable rate is higher than a 5 year or a 3 year fixed mortgage. So you definitely need more income to qualify, because a stress test, which was introduced many years ago. Now it's a very common thing. Every person in the mortgage industry knows about that. We will have to add 2% on top of your interest rate, whether it's a fixed rate, variable rate, we have to add 2% on top of that. So if variable rate is higher already, we add 2% on top of that. Sometimes the ratios, the gross debt service ratio and the total debt service ratio, we have explained this in our previous videos, are out of range. And that's the reason we may not even be able to qualify our clients in for a variable. Then obviously by default, the best option would be a 3 year fix or a 5 year fix, depending upon what the clients like, right?
Mhm.
So Kim, there's another question. What's the difference between illegal and legal basement suite? Will lenders accept income for both types of suites? Would you like to take
Mhm.
that one?
Yeah, so good question. When it comes to an illegal suite and legal basement suite, illegal suite is essentially if you've got a suite where it's not recognized through the actual city itself, that essentially is an illegal suite. Because when you build a legalized basement suite, there's a lot of standards and there's a lot of code and conduct that you do have to meet, right? There's a certain set of criterias, and again, the city has to come out and inspect it and deem that this is habitable, it's a safe place to live, and once you have that seal of approval through the city, that is what makes it an actual legalized basin suite.
Mhm.
So some of the differences is that, there's certain window measurements that you need to have, right? You need to have a certain type of like double heating. You need to have a certain amount of fire, like the fire sprinkler systems. Like there's little nuances like that that make your property a legal suite. When you have an illegal suite, essentially it's just a separate entry. That's kind of how I like to explain it, right?
Mhm.
That in essence is an illegal suite. Again, there could be, the windows that may not be up to code, all that good stuff. Now, when it comes to will lenders accept income from both types of suites, this is a very tricky question.
Mhm.
Most, of course, 100% lenders will accept it if it's an actual recognized legal suite. But there are always the exceptions where some lenders will accept income from an illegal suite as long as it's self-contained. So the key word is it has to be self-contained, meaning there's separate entrance. Okay. Now all lenders will accept it, but as long as it is self-contained, there will be lenders that will accept that. I think like out in BC, it's a little bit more common because again, there's more homes out there that are illegal suites. It's not recognized through BC. Like it is a very common thing that we see out there, but when you're looking at provinces in like Alberta, for an example, it is a little bit more challenging. I find that most lenders, what they will lean more towards legalized suites, right, in order to be able to use that income to help you for qualifying.
Absolutely, yeah, especially with, I would say, multiple unit residential properties. There's lots of questions coming in since CMHC launched the MLI product, where you have to have 5 units plus and go under the commercial financing. We help you with, by the way, we both of us, we can help you with connect your commercial partners under that for those properties, also multiple unit residential properties, which are more than 5 plus, right? Especially with those properties, the suite has to be legal. That's the main thing. That's how it becomes one unit. I have seen basically people buying properties which are basically, let's say, 3 units on the top above grade and 3 units on the bottom, which would be basement suites, but all of them are legal. If they are not legal, the income would not be used for that CMHC MLI product. It will not become 6 units, or it will not become 5+ units, and you cannot basically qualify for that program and go for at least apply for that program. That would be a big no over there, right? So other thing came, I remember, just remembered, legal suites, I believe, if I'm correct me if I'm wrong, the city will also ask for a parking space for the tenant, right? So you need to have enough parking space for your tenant if you are basically making it as a legal suite. So
Mm-hmm.
that's definitely according to code. It should be built according to code. I added a spice kitchen in my property this January, and I know I had to go through that code thing, multiple inspections and everything. And for just for peace of mind, but I know that it is all green stickers besides my panel, right? So it's all up to code, right? Even though there was no need, some people would say there's no need to do that, but there's definitely an advantage for a legal stuff, whether it's a basement or any addition that you're doing in your property. It's that it adds on to years of value in that property, right? So
Mm-hmm. Mm-hmm. Yeah, awesome. So I guess we'll take on a few more questions if there are any here, and then we'll probably wrap it up until next time. But yeah, like I said, guys, if you have any questions, so again, we're just doing an open forum Q&A. Any questions, just type it in the comment box below, and then we'll be able to answer that. I think like another thing as well too is if you are in the market right now looking to buy a new property and you're unsure if this particular property has a legal suite, just know that there's an actual database, right? Depending on the city that you're in. I know City of Calgary, right on the City of Calgary website, there is a section where you can find a registered legal suite. So if you're ever wondering if this is actually, registered through the city, it's recognized by the city, yeah, you can actually enter in the address on that database and you should be able to find that information out.
absolutely. Kim, there's another topic we always discuss about is property taxes. I know our clients always ask those questions. Would you like to share how's Calgary doing with property taxes regarding the budget and everything? Have you heard anything? Over here in Edmonton, there's a lot of uproar right now. There's a petition going on change.org that City of Edmonton should relook at their property taxes because there are some news articles saying that 2025 taxes would be way more than 2024. What are you hearing in Calgary? Any
It's
idea?
the same, it's the same news for us. So I think we
Any?
had a really, really big shock. Like everybody, any homeowner I spoke to when they got their 2024 bill, it was a huge wake-up call. So I think we got that fat bill first before Edmonton.
Yeah. So just today I called a suburb, I would say city outside Edmonton geographic area. One of the lender was basically asking me about the mill rate for that property. A mill rate is a technical term which basically determines what the property tax number would be. That's how the cities basically work upon. That's the formula. So I was surprised to hear that mill rate was way lower than City of Edmonton numbers, right? So what I think will happen is gradually these cities will expand, but people will move out into more bedroom communities like um, Chestermere, right? Or it could be Okotoks, right, in Calgary area, or in Edmonton area, it would be Sherwood Park, or maybe some other Leduc, Beaumont, right? Beaumont has grown so much in the Edmonton area in front of my eyes, like you cannot even recognize how that city has grown. So property tax topic is very other topic Kim we could bring to our listeners and viewers. I know always there are questions regarding that. So looks like we don't have any more questions. So I think we should wrap it up over here, Kim. I would like to thank our listeners and viewers for joining us today for our live session of Mortgage Insiders Edition. We always thank you for your support. Kim?
Yes, thanks, guys. And then I guess we'll catch you on the next one.
Absolutely. Thank you, guys. Take care.